I'm super excited to welcome Anatoly Crachilov, CEO and founding partner of Nickel Digital Asset Management, based in London, one of the oldest and most well-established digital asset hedge funds. He's been coming to Davos for quite a few years, and we caught him here on the main promenade in Davos. Anatoly, welcome to RULEMATCH Spot On.
Thank you. It's a pleasure to be here.
You've been coming quite a few years, back and forth between London, Davos. What is kind of your general feeling of the vibe and what's going on this year in Davos?
Yes, this is my third year, and certainly the vibe changes from, at least the theme changes from one year to another. This year, I think AI and sustainability is one of the core topics. In the previous years, we had digital assets being on the peak. Now we're going to see perhaps a merge of digital assets and AI. But certainly kind of the vibe is here, and there is an excitement in the air. And certainly changes in the US, I think, create this economic boost possible, which we are see coming. And that is reflected in the mood in Davos this year.
Mm-hmm. Obviously, many big financial players come to Davos, financial institutions. This is a place where they do a lot of business, do a lot of conversations. Do you get the sense that financial institutions in crypto and digital assets are even bigger than they have been before now?
Absolutely. As a matter of fact, last year was, I would say, a turning point for digital assets, specifically on the institutional side. And to the large extent, I would attribute to Larry Fink and his very pro-crypto stance, very constructive view on this industry, and ultimately launch of BlackRock ETFs, Bitcoin ETF, Fidelity, Franklin Templeton, certainly created this inflow of capital by institutional investors who for a long time were on the sidelines trying to understand whether it's kind of a place they can engage, whether there is a career risk, whether regulatory environment supportive or not. And really, engagement of the largest asset manager in the world in digital assets helped this transition. And ultimately, a launch of ETF happened to be the most successful ETF launch in the history of ETFs, 35 years long across 11,000 different launches. Certainly kind of dynamics is there, and now we're seeing a much broader spectrum of investors coming into space. For example, 13F disclosure, which was kind of quarterly disclosure by all large asset managers in first quarter last year, suddenly revealed all major hedge funds, including Millennium with 2 billion allocation to Bitcoin ETF, are now in the space, right? It's the beginning of the journey, but certainly we'll see more and more engagement as market unfolds. And with the new US administration, we're certainly going to see perhaps completely reshaped space. So it's a great time ahead for digital assets.
Very, very exciting time. Just on that point about the ETFs and hedge funds, obviously hedge funds come in with big balance sheets, putting a lot of capital behind that. Then now with these kind of more traditional assets backed by crypto assets, there are many other options for hedge funds to do different strategies, do different things, right?
Absolutely.
Talk to me about those conversations and what people are thinking about how they can expand and be more sophisticated in the space.
Sure. So if you think about digital assets, the base case scenario for many investors is be long the space, which certainly has its merit. It comes with naturally with the significant volatility. So more intelligence, perhaps, intelligent approach is to have market neutral exposure to this space. And here you have the whole range of potential strategies you can deploy, including stat ARB, relative value, basis, funding ARB, mean reversion strategies. Basis trade used to be pretty much the only game in town until recently, specifically being long spot, short future, and many hedge funds who engaged, that was their first entry in space. Now, evolution from here is really you're going for more sophisticated implementation, including statistical arbitrage and relative value. It requires a broader set of instruments, much more developed derivative markets, and actually we are seeing this. As a matter of fact, crypto follows perhaps the pattern similar to commodities, whereby your spot market is much smaller than your derivative market, and that's exactly what we're seeing now in digital assets. And with that evolution, you now can deploy the whole range of traditional, well-tested strategies to crypto, right? And again, what I mentioned, StatArb, RV, they are kind of now all sophisticated hedge funds are using this very intensively.
And I think from Nicole's standpoint, you're also looking at many different strategies and working with a lot of different players who implement these strategies. Talk to me just how you're looking at it from your own point of view.
Yes, you mean on infrastructure side or?
On a company side, on a fund side, and infrastructure as well.
Yeah. So on the fund side, we're seeing engagement, first of all, kind of from large allocators who came to this realization, actually, digital assets are A, here to stay, and B, it's a very exciting frontier market, right? Because spreads are certainly much wider than you would find in traditional finance. There is still inefficiencies in the market, which for hedge funds is very kind of productive, constructive environment to be in. Now, from that perspective, you see the desire and interest to engage, which, however, requires certain very idiosyncratic infrastructure, because crypto trades 24/7, in contrast with traditional markets, which would tend to close overnight, certainly for the weekends or for holidays. Crypto never stops, right? Kind of we trade 365, including Christmas night. So from that perspective, to control the risk of these trades, you need a very different infrastructure. And that's where we're seeing people coming to us saying, can we leverage your existing infrastructure to access this market? And I think this is the early signs of broad engagement by traditional investors. And for example, most recently we had a fund of funds, a multi-billion fund of funds, certainly kind of engaged only in traditional space, looking at crypto, and we became their first first crypto exposure, right? And again, kind of they're one of the few who are looking at this space.
Super interesting. Just thinking going forward, I mean, things have come quite a ways already. You've been in the space 5 years with Nicole. Is there something on your wish list that could make your job easier, or that could accelerate things, that could really make things explode?
We're not looking for an easy paths, but we're looking for to mitigate risks. We are risk managers, first of all, right? And one of the things which has been on mind of every single allocator to digital assets is counterparty risk. So FTX was awakening call for everyone. It didn't come as a massive surprise. We knew this risk existed in the space. In a post-FTX world, that has changed dramatically. First of all, you do not take direct counterparty risk with the trading venues. You use what is called tri-party agreements or off-exchange settlement to eliminate exposure to trading venues. And instead, your capital sits with the custodians. So to some extent, this piece of puzzle has been settled. Capital efficiency is something which we still can see some improvement. Specifically, people like us, we're facing execution venues, and you would have margin placed on each execution venue, which ideally you would like to net this exposure and create capital efficiency. So for that, you would need a layer of brokerage, prime brokerage, right? Which is still emerging. It's not to the extent which satisfy our expectations, and you need some large traditional players to engage with the space. Say if Goldman or Morgan Stanley were to come, certainly that would be a natural path for us to use this channel to access the market and really leverage this capital efficiency. So as it stands today, we're still extracting Sharp of over 3. Without these efficiencies, added efficiency will improve it further.